Okay, good morning, guys. Welcome to Trade Setup. We've just got the overnight or macro recap. So I'm just going to look at the macro picture of the overnight markets and what's essentially playing out, what we could be looking at today. So we've got the SPYs just opened a minute ago. I don't know if anyone's watching that at all, but that's opened a bit weaker than expected. So this is the 30-minute chart, just what we've got our eye on. So you can see the legs up. If we can just draw that in, I'll just here we go. We'll draw that in now. Just draw it on a yellow color. There you go. So this is what we've been watching. You've got a bit of a correction here, and now the market's come all the way back down. So this is what the concerning picture is. We could be looking at something like that. It's on that's on the 30-minute chart. It's not, I guess, too concerning, but we've had the market press down into that 64.25. We've had it corrected all the way back up to retest 67.28. Now it's whether we're going to break through this, was it 65.94, and we're going to have a right shoulder. So the right shoulder or the lower high, is that coming into play? And I think even this move up here is starting to look like it's ready to correct. So not only we could have a major lower high, but there could be this minor lower high coming into play too. So it's just this leg up is starting to break down. If we go down to the 5-minute chart, I'll show you what I'm talking about. So there's not, once this leg up starts to break, or break down off 65, probably not showing it too much, 65.94, 4. So that was a leg up off that zone there. If that's starting to break down, it just means that the market's running out of steam. If you're any bulls that are expecting to push back up to 67.28, could be sourly disappointed. So if we're just looking at that now, I'm on the, what chart is this? I thought it was a 30-minute. There we go. It's come together now. So this is your 5-minute chart, and you can see we draw this leg up. If we just draw the support zone through, I thought I had it in there. I've got it on the other one. This is basically your support zone, which is just starting to break down now. Oh, yep. So it's just starting to break down now, which is not a good sign. So it'll be interesting to see how we, how we react off this 29, whether we do react off there. The market stretched a bit, so we're expecting the market only really after overnight action open down, flat to 5 points on the ASX, but with the SPY that's actually pushed down another, what would you say, 10 points on the open, it's not the best sign. So it could be down another 15 points on the ASX. If that makes sense. So as long as the SPY is holding up around these support zones, is to whether or not the ASX is going to open a bit weaker, because the SPY will be mucking around, obviously, on the 10-minute open. So it opens at 9:50, so 10 o'clock the market starts opening, so it could easily wash out, bounce back here, and meaning the ASX is going to open relatively flat. But this is just more of a washout, trying to get some stops triggered in the first 10 or 15 minutes. So whether it's 10 o'clock or 5 past 10 before it starts picking a direction with regards to the ASX200. So yeah, we'll see how this goes. Let's take a look at the macro picture before we get going. So overnight, we had indexes. Look, the Dow was up about 100 points, I think, at one stage, coming into 5 o'clock in the morning, our time, Melbourne time or Sydney time. Excuse me. So around that time, they had the Brexit vote. So the first Brexit vote got passed, and that's on the actual deal, a deal between Britain and the EU. So that passed. They're sort of happy with the deal, with what's coming about there, but they're not happy with the timeline, which is a bit of a kick in the guts for old Boris. But then again, he wants Brexit by the 31st anyway, or end of this month. But it looks like they're going to seek a delay now from the EU, but the EU are sitting around waiting to see what happens out of England. So it sort of seems to be that politics continues to get in the way of any sort of deal that's getting done. So I don't know why they're voting on that they're happy with the deal, but they're voting against it getting done or getting pushed through by the 31st. They want a bit more time to work things out, or to put a Brexit plan in place, whereas Boris is pushing for the 31st. Done, get out, let's go. So that caused a bit of a trigger in your currencies on the downside, a bit of a sell-off. The US dollar rallied, it bounced quite hard or cut quite sharp. You can see the reaction from the pound. Excuse me, bit of a frog there. that was a reaction in the pound around that 5 o'clock mark. It sort of ticked up and then boom, straight down, and that dropped about 120 pips or so from this high. So it dropped to what, 73 down to about 73. So just over 100 pips from this high up here after that spike low, that spike higher. But the market, if it's anywhere near a zone, come into numbers like that. Same with Aussie numbers, anything like that. On the Aussie dollar, they always spike through. They will always clean out either way of the market. They'll bang up, bang down, and then start to pick the direction later on. So that's pretty much what happened on the pound. That's got knocked around a bit, but still, there could be. There's quite a bit of fuel that's built up. And if you look at longer term, it's pushed up from 2208, and we're at 28. So 800 pips, nearly 900 pips. Rally here, so there's quite a bit of long fuel built up if this thing wants to get ahead of steam on the downside. So it's reason to be concerned. I mean, the market, you can see that was initial reaction up, corrected, and it's reaction up. So any buying, sort of as we get higher, is starting to run out of steam, and the sellers are starting to come in. So when you get this curve kind of action, it means that anyone that's long from here or even long from here is willing to take some profit or take some risk off the table. And the sellers are starting to edge in. So the table's basically turning from long biased to short biased, potentially short biased. So that's the pound. I mean, there has a lot of long fuel. Anyone that's built it, potentially bought it up here, is feeling the pinch. Anyone that's here is still holding, potentially, or holding here. So there's still, as you step your way back, there's still all that fuel that's built up that could be squeezed out of the market with a reaction lower. It all just depends, I guess, depending on what's happening on Brexit. It continues to be a bit of a shemozzle, I guess you'd call it, shambles, with what's going on. It's just continually getting delayed. It's just politics, one side against the other, exit against no exit, Brexit against no Brexit. They were concerned about, obviously, a hard exit when things could get with no deal, but seems to be there's a deal on the table, and they're still not happy for some reason to get things voted and to get it pushed through. So yeah, there's still concerns there. There's still volatility that's going to come into this market, into the pound, and potentially that's across the board. You can see the way the Dow reacted up 100, then bang, finished down 30 or so on the index itself. What did it finish down? It finished, where am I? Dow, sorry, down 39 points. So it was up 100 at one stage and got knocked down at 130 to finish in the red. So that's not the greatest of signs. There's still headwinds playing out on the overall markets. In the way of earnings have got off with a good start. Got off to a good start, a bit more positive, but they're already, the bar has set really low. So it's not hard to beat expectations when the bar's set low. So it'll be interesting to see going forward, as they were talking about. It's always quite positive off the start, and then as more and more come through, they're still expecting overall the market to contract 3% or so with earnings, US earnings. So that could, again, put pressure on the market, but still they're doing the right thing with trade. They're still talking up. Both sides are talking up. We're going, they're not really doing anything. It's just the same old, same old. They're just biding their time more than anything. That's what it seems like, and try to get this market established into an uptrend, I guess. That's what it feels like with the overall market. We just go to the Dow. This is your 30-minute chart. If we just get down to we'll go to a daily. We're inching towards those all-time highs, and just a push up through this zone. It's not really, well, it is a bit of minor level. It's cleared out that zone, so we could see that buyers, the higher lows are holding. We could have a sweep down to that zone, hold another higher low, and press back up. We could just continue to chop around, but it looks like it's edging towards sort of new highs, new all-time highs. And don't be surprised if we sort of pull back, build enough of a higher low in here at a higher level, and spike up through into new highs. That's going to drag in a few more people. But then again, it's still got data that's coming out relatively contained. I think, what was it? Housing data was out last night, below expectations. Let's just see what they come out at. I think it was the housing data. US existing home sales slightly below expectations, but they're up. That's not a bad thing. Manufacturing, that's not a big number anyway, but that's a little bit better expectations. So, yeah, all in all, there's still some headwinds to the US, and that's why it's struggling sort of up near these highs. But then again, it is still on its way up. I mean, the longer term trend is still up. That's the daily, the weekly, it's still edging higher, holding higher lows. So that's a sign of strength. Let's just go now to see where the ASX is open, and then let's just look at the. Sorry, this is the UK, the FTSE. This to me, well, a mess there, but this to me is looking a bit weak more than anything else. You've got this overhead resistance or supply zone right up here, say 7,700 or 7,750. Then you've got this lower high that's built around 7,430, and it's pressuring the market down. It did pop a bit last night, but don't forget they closed at about 1:32 a.m. and the news came out at 5. So I think they're going to play catch up. So I think they're going to open down or open weak. You would expect open weaker tonight, and the same with the DAX. The DAX is going to have to play catch up as well on the downside. So I think that could get tagged. That could confirm just to see if it pushes down to sort of 70, say 7,000 even, or 70.30, these lows from prior. Then to me, that's really finding some weakness off this supply zone. So they could be heading south. Again, a Brexit deal is going to be good, but if they can't make up their mind, anytime they talk it up, it seems to be the same with trade. They're talking up something's happening, they're putting out good signs, but they're not actually doing anything. When the proverbial hits the fan, they're not making a deal. So when it comes to the crunch, they're not making a deal. They can talk it up all they want, but until something's done, the market will be struggling between buyers and sellers. So that is the FTSE. The DAX is looking a little bit better, but again, they're actually looking much better. Longer term, that's your daily. The market's pressed up, had a good pullback. It's on the rise at the moment. It's taken out previous highs around 44, but with what's going on at the moment, is that going to be a washout? If if the deal falls apart, if something happens here, are we going to have a bit of a washout and then start to head south through here? And then, the crux will be whether we can hold a lower high and do this kind of action. If we start to get a good sell-off and then a tentative rally, then I'd be concerned that they were going to head down, to new lows or even test right down to sort of that 10,500 mark, which is 2,000 points away. So that is a bit of a concern because it got through. When you get through a resistance zone or you got a key level, it pushes through. It doesn't mean that it's broken, once you get this break, because it's not convincing. So we have to see what sort of reaction there's going to be. And I do expect a reaction to the downside because of the Brexit potential delay. And don't forget that delay is going to be viewed that there's just going to be the argy-bargy between now and something happening. The deal could fall apart. The EU could pull the pin on a deal. And then all of a sudden you're looking at a hard exit again. And that's going to create some uncertainty, obviously, for the Eurozone because they're already struggling with growth. And if they're struggling with growth and then you've got the uncertainty of Brexit, no one, the companies and investment, they don't know what to do because they don't know where the goals are set. The goals keep moving. So if they keep moving, why would you invest into the market, the overall market? Just 1 second here, guys. Just 1 second. I've got quickly. Sorry about that. All right, so that's with regards to Brexit. It's still going to be, and as long as they don't have a deal, there's going to be the uncertainty about. I mean, the US, new investment into the US is going to struggle because of the trade wars. They just don't know what's going to happen. They don't know if it's going to continue. So if you're going to invest money and it's going to be wasted because trade war just keeps dragging on, why would you bother doing that? And also, this is the same I see with Brexit. New investment, corporate investment. Why would they bother just yet until they know exactly where the goalposts have been put and they know what's going on? So until that happens, it's kind of hard for corporate or companies to start new investment or investment into their growth because they don't know which way growth is going to be or where it's going to head. So there you go. That's what I'm seeing there. So that, in essence, I think is just going to put a bit of pressure into the market. So we've got 6 minutes in. We're opening down 2 points. It's not too bad at the moment. Don't forget, it's probably going to be a few points lower once it kicks on a bit more. It has bounced on the SPY. We've bounced off that support, so we're sort of closer to where it closed the overnight session at 43. So only a few points down. So that could mean that the ASX is going to be happy to open down 5 to 10 maybe. We'll just see. But either way, there is that concern. The overall picture, you can see the sudden push down. So this is on a 30-minute chart. That sudden push down, and we've had this grind all the way back up to those highs on the ASX. Actually, let's just look at it here, because this is probably better. I can draw on it a bit better. So it's a 30-minute chart. If you go to the daily on the ASX, it's not overly concerning. And this is what we pumped out yesterday, what I put out yesterday. And it's on the trading view as well. You can see, well, that's not, there you go, that's a bit better. You can see we've been stuck between lower highs and higher lows. There you go. Oh, it's a bit weird. I've got to readjust. Oh, how weird's that? That's pretty cool. All right, now we seem to have got it. So we've got the market, it's just oscillating. So you've got higher lows, lower highs. That is, a surefire way to see that there's uncertainty in the market between bullish and bearishness. Bullishness and bearishness. The bulls are still, there's an argument for the bulls and there's an argument for the bears. It's just nothing. I mean, and this is, I guess, it's a good tactic from Trump and his government and the EU. Is just that stalling, because if trade, as long as they're stalling, there's that uncertainty, and they can talk it up all they want, and that's what it looks like they're doing. They're stalling because they're trying to get that positivity in the market to run to all-time highs. It's going to help Trump if you got the US pushing into all-time highs again. It's good for his 2020 elections, because he can just turn around and say, look what I've done. I've done this, it's been great. The problem is he is crimping the market. The data is suggesting the opposite. It's not as good as what you think. It doesn't matter what the index is actually saying. Things are getting ahead. They're just going to continue on the way up, as long as there's nothing much. They've sort of factored in, I guess, data, what's coming out, economic data, slowing growth. But again, the US is not as bad as the EU. But either way, I think the market is still just getting a bit ahead of itself. Valuations are stretched. You got corporate, they're still talking up. I mean, as long as earnings come out and if their projections are a bit weaker than expected, then yeah, that's going to cause problems in the US. But I still think they're going to spike into all-time highs. It's going to drag in a few buys, and it could turn around quite easily and get swept back out of the market on a move down. So that's why you're getting our market really just sitting there. We're caught between trade wars and commodities prices and demand from China. That on the upside, that's crimping the upside moves. But on the downside, we're still doing okay. That's crimping any upside move. But on the downside, if you're looking to lows, we're actually, I think, still doing okay. Our economy is doing well. Quite strong, low unemployment, all those sorts of things. The RBA is doing their best to cut rates to stimulate or continue stimulation into the economy. Sooner or later, it's going to come to a point where they can't keep cutting, and if the market starts to roll over, there's going to be a few issues. But I think that's going to be dependent on what's happening overseas and with global growth. So yeah, I think going forward, we're still going to be stuck. If we roll over here, if we hold this lower high, and we start to push through these lows at 66.12 on the ASX, which is, it's probably 50, 60 points away. If we hold this lower high below 67.40, we can even push all the way up to 67.20, another 50 points up from here, and still hold a lower high. But if we do hold that lower high, I think we're going to oscillate back down to sort of this bid zone above 6,400. Well, actually above 64.75, this most recent high low, I think potentially somewhere in the 65.50 zone, but above 65 you would expect. It could come down quite hard and touch on 65, but we'll see. But I still think we're going to be oscillating. There's no reason to break above or below just yet, I would feel. If something happens on the way of trade, as in a phase one gets pushed through, they sign off on a phase one deal, then this could lift the market. It's just one of those things. We have to wait and see what plays out. So we've got our eye on these lower highs and higher lows. If we start pressing up from here and we do test 67.40, that's essentially breaking to the upside. you would expect, and then you would expect from there probably a pullback, maybe a wash out of that zone, pullback, build a higher low, and a press up into all-time highs, new all-time highs. I think the market's still just, it's got that tentative feel to it, and we're down 7.7 at the moment, so we're opening only down 7 points, which is not too bad considering, but it's still looking a bit tentative. If you look at that SPY again, the longer term picture, that's a 5 minute. If you go to the 30-minute chart, it could be this. It doesn't mean just because it's tested 65.94, it doesn't mean that we're going to roll over. Just because this leg is potentially breaking down doesn't mean we're going to break through 65.94. It's going to be sentiment driven. And this market could chop around here, hold a lower high, and test this 66.64. It could just, longer term, let's just, no, that's all right. Let's just clear out. Actually, no, we'll keep that in. If we go from here, we're pressing down, and we do press down, we could just, start to get this sort of chop and contained action and head higher. It's still an each way bet. I mean, the bull's not in charge, the bear's not in charge. It's as simple as that. And until we get some sort of confirmation, I mean, if we pop up from here, 66.29, it's probably better to go to 30-minute. If we bounce off here and start to hold a key lower high, yeah, I'll be looking to a break of 66.29 and probably a push lower, maybe looking for a retest of 94. But until that plays out, we're still just it's still choppy price action. And look at yesterday. I mean, that was kind of strange. We opened up, spiked down quite hard, and then bounced really hard. So the bulls were still pushing the market higher. You get this sell-off here, it come back quite hard. And then when you get this grind to the highs. Now, if you remember what happened on the ASX, let's just go to a daily. Where was it? Here. Remember this price action? Every time you get the sell-off, it come back and then grind it up. So this grindy price action, it's still until something triggered it lower, and then we had this big sell-off. So we'll have to wait and see how it goes. At the moment, I'm not really trading the SPY. I'm not really confident the way it's bounced back quite hard. The way it's trading like that, I'm not confident to jump in long or short. I think if you go long, you could be facing this kind of a pullback, and then going long here is more of a flip of the coin. To say that we're going to bounce back strong. I didn't see any setups yesterday, not really any the day before. So we'll have to just keep an eye on and see what happens. If we can start to hold a higher low off here, it could be a bit of an intraday long play for a bit of a grind back up. But I think Brexit, we'll have to see how Brexit plays out. That's going to weigh on the market. But then again, we know what's happening there. It's got voted against, so we have to wait and see what the EU says now. So if the EU come out and say something while our market's open, could trigger a bit of a buy, but we'll see. Either way, guys, there's a lot of uncertainty out there at the moment. We've still got some longs on, which are looking quite good. Where are they at the moment? VHT and UWL. UWL was down a bit at the moment, but that would have been expected after that pop up into the close. VHT, it's gapped up on really good numbers. So both of those had good numbers yesterday, low debt and no debt. So doing quite well. It's just the uncertain market where you get these gap ups and then they fill the gap quite easily. No one's willing to hold, or no one's willing to load up long, and they are chopping around. So that's what we're facing at the moment. UWL, we want to see if it can kick up through this high, see if we can push up into these highs. We're happy to take a profit. I think it's always good to take a profit and book something in these uncertain markets. It's really hard to hold longs because you get this push up and then a savage pullback, and they can wash out on the downside. So there's still that tentative play out there. All right, guys, that's probably about it. Any questions, feel free to send us an email to support@tradesetup.com.au, and we'll see how we go from it tomorrow. Keep an eye out for whether we're going to do a talk in the morning. We'll just see how it goes. If there's anything major comes out tonight, a big market moving, we'll do a talk in the morning. But other than that, if it's sedate night overnight, there's not much levels. You'll see the levels if we come into the close. But just keep an eye out. If you're trading intraday, be careful of the chop. And longer term, again, it's kind of an each way bet at the moment between bulls and bears. So we're not willing to jump in, not going to jump in heavy. We've only got 2 positions at the moment, and we're looking both sides of the market, short and long. And there is, if you're just kicking off, we're looking at FMG. FMG is pressed up at the moment, but it's still this action here off. Essentially, it's got an offer zone. above 9, that offer zone, it's pushed up there through there once, backed off, pushed up through there a second time, had a good pullback. It's pressed back up there. So we're pressed back at just above 9, and we're starting to get some selling pressure coming in. So it's not a good sign for FMG, and it could have a bit of a pullback. Even longer term, we might get this choppy action down to 750 before it builds a base and goes again. But I wouldn't be long into this market just yet. I want to see a high low. I want to see a key. If I get a break through 9, pull back and build a high low, that could be a good sign. But I don't think that's going to happen just yet. Otherwise, there could be a bit of a short coming into play. So that's it. We're looking basically, like I said, each side of the market. We've got Cochlear, a bit of a bugger. We were short that, and up until yesterday, it was not looking too bad. It was looking more like a long, and then news come out, sell off, and it's looking short again. So we're cleaned up out of that one, which is a shame, but that's the way it is. I mean, that's the way it is at the moment. There's tentativeness on the upside. People are creeping into the market, and they're not sitting around holding because they're just concerned that this market could tip over at any second, which is a fair enough assessment. All right, guys, we'll call it a day. Thanks for joining me, and yeah, look out to see if we're coming in tomorrow morning at, again, around the 9:45, 9:50 mark, 10 to 10, and we'll see what happens overnight. Good luck for today, and we'll speak to you soon. Cheers, bye.